Brinda Jagir, General Manager and Head Economic Research at SBI, joins in on the show to discuss just that. Brinda, hi, afternoon. Thanks for taking time out. Firstly, what according to you has led to such a sharp decline in the rupee? Do you think the slide is structural or technical?
I think this is no longer a story about India and the rupee. I think we need to place it in the global context and see what is happening globally. It's not just the rupee that has weakened. We can see a whole lot of currencies that have between April and now. The rupee, of course, has weakened, say, by about 10%, just below the Brazilian real, but all other currencies except the Japanese yen have also weakened. Let's look at the countries in our region: Indonesia, Malaysia, Thailand, Korea, Singapore. All these currencies are weakened, but at much smaller levels, say about 2 to 4%, 5% up to. Now, what is interesting is that all these countries are actually current account surplus countries, and these countries are exporters of capital, while India is an importer of capital. So, if even these countries have shown weakness, if even these currencies are showing weakness, then it's just not something to do with India. The second point is that this comes on top of the global headwinds that we are seeing. That is kicking in now. The global risk aversion is really playing a bigger role, and this now comes in on top of the weakness that was already seen in the rupee. The rupee was already under pressure, one, because of the widening current account deficit, then of course higher inflation and larger demand for rupee, larger demand for dollar coming in from oil, and also from the on account of large FCCB redemptions. So the rupee was already under pressure, and this has got aggravated by the global headwinds.
Fair point, Brinda, but what's got the market worried is the velocity of the fall. I mean, we breached 55 to $1 day before yesterday. Today we've hit 56 to $1, and there seems to be no bottom in sight.
You know, it's difficult to say, mainly because what is happening in the European context. If you find the dollar strengthening so much against the euro, obviously that is going to have an impact on the rupee. So that's why I'm saying at this point, it's the global headwinds, it's the global risk aversion, it's the global deleveraging that is impacting the rupee rather than any sudden trigger within the economy. Of course, our concerns remain about the fiscal deficit and the current account deficit and high inflation. Those concerns, of course, remain. But before we are able to address them, what is happening is the global economy has changed so much, become so adverse, I should say, that it's difficult just to say that this is the rupee story and this is the India story. So it's gone beyond that, is what I'm trying to say.
Right. So what, according to you, are the tools that the RBI has with itself to protect the slide in the rupee? Because each time RBI has been intervening, it seems to be leaving the rupee to perform as per market conditions, and nothing has been working till now.
You know, RBI has taken a lot of steps, and it has tried to check the speculation. It has taken steps to increase the supply of dollars in the economy. But like I said, now this is, let me just put this in a broader context. In 98, there's right now clamor for doing another resurgent India bond, something like we did in 98. This would increase the supply of dollars, yes, but look at the macro context. Growth in 98 was 6.7%, today it's 6.9 or even less. Inflation was 5.4%. Today it's close to about 7%, 6-7%. The similarity ends there. The fiscal deficit is much higher today than what it was then. The current account deficit, which was only around 1% then, is close to 4%. It would come down to 3% by the end of the year. That's my own view. And the oil prices. Oil prices is something like under $15, and today it is 109. So it is all this scenario that has changed. So it's not possible. It's for just for just RBI to take a few steps and correct the whole situation. We need to put this debate in the larger context of India's economic growth.
So you're saying a massive sovereign bond issuance by the RBI is not going to work. You know, market is expecting a $20 billion type sovereign bond issuance. You're saying that's not going to work. What can be done, whether by RBI or by the finance ministry? Is there any ammunition left with policymakers at this stage?
we need to see growth coming back. We need to see some confidence in the economy which will attract investment from abroad, which will attract investment from within the country. So I think the whole focus now should be on how we can get the Indian economy up and running. The investment pipeline is drying up. We need to get investments back on track. We need to get the savings back up, which it will be seeing a softening in the savings rate. We are seeing the gross capital formation going down. So this, I think we now need to focus on growth. It's just too much focus on the rupee and the currency. So if we get back the focus on growth, if we get back confidence in the Indian economy, then we would see this turnaround.